All right, welcome back to Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy. Thank you very much for tuning in. 15 minutes, 14 minutes actually. We've got the Cow Guy closed. Stay tuned with us. That's 1 Central, 2 Eastern. But right now, let's take a look at what's going on here, and that's that corn table. Let's take a look at corn, and what do we got going on? Well, we got an 8 1/4 cent loss in the July, 7.98 3/4. It's kind of been like this all day. If you go out to the Dees, which is the new crop, that's off 4 cents to 7.45 3/4. Let's see about soybeans. It was a little bit of a different story, but they began to roll over a little bit late. Well, we're still up here. That May contract, which is going off soon, 4 3/4 cents higher, but we do have July up 1 3/4 cents to 16.95 even, giving up that 17 handle. We have new crop Novi beans down 2.5 cents to 15.18 1/2. All right, how about wheat in Chicago? Talk about that for a second. That's been a little bit of a bruiser. July's off 16.5 cents to 11.12 1/4. And even if you go out the deferreds, we still see some losses of, say, 11 3/4 cents on that March of 2023. It stands at 10.93 last. How about hard red wheat in Kansas City? Well, that's about the same, 10 cents lower. 11.79. We're about 8 cents off the lows there. But we had a 12.02. We had a 12 in front of it earlier today. Go out to March of 2023. That's another dime loss out there. 11.61 1/2 is last there. How about spring wheat in Minneapolis? Well, this one's rolled over. It was higher across the board today, but not now. July's off 2 3/4 cents to 11.75 1/4. Just kind of giving up the ghost here. But if you do go out to March of 2023 again, look, it's up 4 1/4 cents out there, 11.63 even. And then finally, this one has been a bruiser. Pretty ugly, 479 points lower than that July cotton contract to 138.46. And Dees is off 239 points to 121. Oh, wait, giving back a lot of the real estate we gained over the last few days. All right, let's bring in our next guest analyst. That would be Ted Seifried from Zaner Ag Hedge. Ted, thanks for joining the show. What do you think about these row crops? What's up?
We had a really strong day yesterday, Scott. So for us to be giving a little bit of that back in corn, it's all right. We've been kind of sitting here all day in fairly quiet markets, wondering if we were going to have corn pull beans down at the end, or beans were going to kind of try to go and pull corn. Looks like we have our answer. The little heaviness in corn bringing us down, and a lot of that's tied to what's going on in the energy markets. I mean, look at crude oil down $5-6 today. So in my mind, all the things that we're seeing on the board for the row crops, it's really not much on a day where crude's down almost $6. I think that says we're hanging in pretty well. We had another sale to unknown destinations of old crop beans this morning. We are on a path to have to really aggressively price ration soybeans at some point. So yeah, the grain fundamentals, yes, we're tied into energies, but again, on a day where energies are down sharply, we're not down very sharply in grains, especially after all the strength that we saw yesterday. So I think this is a pretty good day for corn and soybeans. I wouldn't be surprised if we saw a little bit of follow through, weakness to the downside tomorrow, especially if crude does. But it really makes you ask the question, is this it for the energy crisis and high energy prices? Is crude oil going to roll over and go sharply lower, or is this a head fake bear trap that we're seeing in the crude oil today? We ask that question because it will have a profound impact on what happens with the grains going forward. But I'm leaning towards the latter, Scott. I think this is a bit of a head fake in the crude oil. I'm not sure we're going to break that chart down and call this a day, or say the rally's over there in the energies.
Yeah, I think I'm in your camp, which maybe is dangerous, but I agree with you on that one. All right, we're going to go away, take a quick break, come back and talk livestock with Ted Seifried from Zaner Ag Hedge after these messages. All right, welcome back to Market Day Report. I'm Scott Schulte, and let's get into it. How about the live cattle? Let's see what's happening over there. Live cattle, very quiet day today. April up 85 cents to 141.32, but if you look at the board there, we only have about a 90-cent range, so this is still very quiet. We have seen some 80-cent. We tacked on 80 cents in June and August. June's at 136.60, but still just a quiet, better board. We'll take that in live cattle. How about feeders? Let's see what's happening with feeders with the lower corn board. We're trying to get off to a decent start. April's up 82 cents here. 156.60. We have May up $1.67 to 160.82. And then finally, lean hogs. What are they doing right now for us? Well, they're mixed. How about that? June's down 52 cents to 121.87, but we have gains in both July and August, about 27 to say 32 cents respectively. So that one's kind of a mixed board, still kind of quiet over there. We've had some decent ranges. But again, posting losses in the front two, and then the next two out deferred, little small gains. So we'll have to wait and see how this one closes. All right, let's bring back in Ted Seifried from Zaner Ag Hedge. Ted, thanks for sticking around. Anything jump out at you when we talk about the livestock prices there?
Really quiet news day for the livestock, Scott. Not a whole lot going on there. But you got to say, let's start with hogs. We are well off the highs. Yeah, it's a mixed board. It doesn't really look like much, but we were on the verge of this upside breakout to go back and test those highs again. And for the fact that we couldn't hold on to that strength earlier today is a little bit disappointing. Not saying that we won't ultimately be able to do that. I think the fundamental setup is there for that. But it would have been nice to be up near the highs, closing near the highs here today in hogs, and it's just not the case. Different story for cattle, though. Like you said, 80 cents higher, that's not a huge day, but we are now back over this cluster of moving averages that we have. The cattle chart all of a sudden starts to look really good. I think we are going to go back and try to test those highs in the cattle. And I'm talking more August and beyond. Again, the front month cattle are concerning for me because of drought conditions. And, there's a lot of upfront cattle, a lot of weight up front. But, you go out to August and beyond, I think there's still upside potential there for that cattle market.
Yeah, and I think that, I agree with you there, too. That's dangerous, again. This seems to be posting some decent gains, even though they've been small, even in the face of we've got that crude oil, on the back of the fact that we had the Fed Governor Bullard come out and say that he thinks interest rates should shoot up a lot higher than everybody else thinks. And I think that's why you've got crude oil lower, too, because of this lower growth, right? Slower and lower growth. The IMF came out and downgraded the world GDP. So all of that out there kind of negative for the economy, and to see these cattle markets kind of hang in there, that's got to be strong, doesn't it?
Yeah, I think demand is going to for grilling season is going to be hot and heavy, and this is what you want to see in a bull market. That grind higher, grind higher is a good bull market.
I agree. All right, man. It's Ted Seifried from Zaner Ag Hedge. He's in Chicago. We're in Nashville. I'm going to bring this one back so I can throw it over to Janet.